beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Taiwanese index up over 2%. The Hang Seng 2 trading with gains of around 0.8%.
So whatever they charge us, we charge them, but we're being nicer than they were.
23,142. It's a little away from where we are, but that's the first retracement of the recent bounce that we had from the lows to the recent high. So first rates are going to be lower, 0.6, 0.7% down, 23,385 on the Nifty.
As far as the fundamentals are concerned, nothing much has changed. If anything, on the earning numbers, we have seen some downgrades.
VIL has taken care of its spectrum dues till FY27. And this will allow them to borrow money from the market and pump it back into capex.
The benchmark indices have lost about 1.5% down on the sensex, and the Nifty right now is below the 23,250 mark.
Ready reckoner rates are nothing but what exactly are the market rates going on in the transactions that happen in the market.
This will raise the government stake in Vodafone Idea from 22.6% to 49%.
House do look a little wobbly. In fact, not a little wobbly, a lot wobbly. It's red across the screen.
Well, it is a tough-looking screen. The market down almost 400 points. This is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema, Surupi here in the studios, and Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, looks
afternoon.
like Trump jitters, fear factor at its highest before the 2nd of April.
And whoever was saying, hurrah, we are closed on Monday and we've escaped the global fall, all of that, it's out of the window. No such luck, right?
Well, that's right. It appears we're catching up on the downside. I think the lone positive is still you have way more number of stocks advancing than declining. On a day when you have the frontline indices that are down more than 1%, and still you have, the advanced decline ratio that's tilted in favor of number of stocks advancing. That's telling you select stocks are still doing well. So I guess that's the way how it plays out. But I think in the next 48 hours or so, we'll know what's on President Trump's mind, and then the markets can, react to all the pieces of news without any kind of question marks. That's the hope. Hopefully, he delivers what he has to say in the next, 36 hours or so, and then we react to that.
Absolutely, Nigel. But, he said so many things.
Yeah.
That's the question.
Just let him get done with it. Whatever he wants to do, let him get done with it.
That's the hope, but I think it's going to linger. We will see. But, tomorrow is tomorrow, and we will at least know to begin with what these tariffs look like, what he wants to do in terms of size, implementation, etc. Let's just begin there, right? The market is at this point in time, we put out one level on the Nifty in the morning. We are exactly at that number now, after a 360-odd point fall. 23,142 is the level that we put out as a support in the morning. And it looked highly improbable, right, that you touched that level. I didn't think we would, but that was the closest in terms of a proper support. That is nothing but the first 38% retracement of the rise that we saw from the 4th of March low to the high that we saw on the 25th of March. 4th to 25th, the market rallied sharply. 23,142 is the 38% retracement of that rally. And I think at the day's low, we've come almost exactly to that. Actually, we broke that. 23,136 is the low today. So we broke that by about 8 points or so. We'll see if if we close here, if you retrace something, we'll have to kind of see. Let's just look at the Nifty Bank as well. And the Nifty Bank is down about 1.33% as well. I think here supports are still some distance off. Nifty Bank was looking much stronger as compared to the Nifty. It had on Friday and actually all of last week it had closed at an important sort of resistance, which is the 61.8%, and we were looking at maybe potential highs back in focus, but we've retraced about 1.33%. As Nigel said, 2:1 advances to decline ratio. So broader market is still holding on in a pretty good fashion, all told. In the morning, it was about 4:1 but still looking good with about 2:1 or roundabout. A lot of stock-specific action, which we will focus on as we go along. Prima.
Well, let's get to the stock-specific or sector-specific action today. So for starters, the Nifty Realty is the top sectoral loser. That's down close to about 3%, with Mumbai-based real estate companies, whether it's Macro, Keystone, Oberoi Realtors, all taking it on the chin after the increase in the Maharashtra ready reckoner rates. So that's negative for the real estate companies, and you can feel the pain. IT too is under pressure. The Nifty IT index is down nearly 2.5%. The street fears the Trump tariffs could hurt the US economy. There could be a slowdown. And therefore, the Indian IT companies, which derive 60-70% of their revenues from North America, could get pressured. And then the third pocket, the third leg of the weakness today is banks. The Nifty banking index is down close to about 700 points, 1.33 of a percentage point down, with heavyweights like HDFC Bank. That's down close to about 3% You've got weakness in ICICI Bank. That's down 2%. Reliance Industries. That's the other one which is weighing, on the way down. Reliance Industries has lost nearly 2%. Not too many places to hide on the way up. You've got an Innocent Bank up 5%. Trend, I think 1000 Store. That's been the, the one which has helped trend today.
No, I was just thinking, listening to you guys, that whether it's budgets, whether it's general elections, state elections, we've been there, done that, and it's all fine. But this tariff, this Liberation Day issue, just you don't know what to expect, from lenient to, I think I'll be hard, but no, I might be lenient to our friends, to our foes. This one is
nice, kind.
Nice, kind. You just don't know what to prepare for this and how to prepare for this. It's really uncharted territory for markets, just in terms of the extent of uncertainty. Anyway, what's interesting is that while the overall market is down, individual stocks are really doing their thing. So there's a lot of stock picking going on. By the way, look at SML Isuzu. In the last, I think, half an hour or 40 minutes of trade, the stocks, it's on our ticker. The ticker team's also picked it up. Let's get the hot board up on SML. Remember, it's a counter which is surrounded by a lot of deal buzz. Ashok Leyland denied it. We don't know if M&M is still a suitor or not, but that one's alive and kicking. Some of the stocks that have been in news today, they've been doing really well. So Vodafone Idea, obviously, now it's a 8 rupees stock. When we started the day, when we ended Friday, with a 6 rupees stock, 18% up over there. HBL Engineering on the order wins, HAL on the order wins. So domestic-facing businesses, where the business news is strong, there's still stock buying going on. So that's something that you have to keep in style. Plus, a lot of the consumer-facing business names, they are finding a lot of takers today. Look at something like a bazaar-style retail, not a very frequent name on the volume charts, but today it's doing really well. Stock is up about 8.5%. The others would include, the ones that are moving on good volumes. Lemon Tree. There are a couple of tier 2 financials doing very well today. IDFC First Bank, Bank of India. So while the headline on the Nifty, the Bank Nifty, is telling you that it's a really bleak day, Nigel, at an individual stock level, there are plenty of buyers doing their thing as well.
Well, that's right. Take a look at PVR. The stock has seen a sharp correction from the top. Looks like the street likes the collections that we have seen on Sikandar, which was released, I think a couple of days already in. So some were debating whether or not it's as big a blockbuster or not, but the screen is telling you that the street at least likes it. Stock up close to around 5%. I don't know whether you guys had a chance to watch the film or not, but it seems buy still has its magic because the stock is doing well. The other one I'm looking at is Trent. They put out the store editions, and it seems the street has liked that because that's the only way to explain the kind of outperformance you've seen on a day when the markets are down. That's one of the top gainers with Indus Bank. So you have Trend that's up, store edition both on Zudio as well as on Westside. It appears it's better than what the sheet is working with, just going by the stock reaction. And ITC Hotels, I recall when we had that, that split that took place and you had the separate listed entity, the stock was in that vicinity of around 170 rupees or so. And the valuations, it appears it's appealing. Even in today's trading session, it appears that that stock is seeing good amount of buying interest. And if you look at the live delivery-based buying as well, that's giving you an indication that it's delivery. It's not traded volume, it's actually delivered out here. So that stock as well doing well. So select stocks are doing a thing of their own, though the headline index continues to see some selling pressure. I'll tell you what, it may not be such a bad thing. You're going into the event, not expecting great things. So factoring in some part of the pain, getting into the event, that may be a blessing in disguise. Mitesh Thakkar joins us. Hi Mitesh, good afternoon. Good to see you win. Well, what do you make of today's trading action? And do you think the crucial technical levels are getting broken? Or do you think it's still pretty much okay? On the Nifty Bank, one level I was observing was the 51,000 odd mark, which was one of the key technical support levels. That's mildly broken. We're 100 points lower from there. And on the Nifty, we're around that 23,200 mark. Your take?
So, I think, my understanding is that the Nifty Bank is still okay. It is the Nifty, itself which is showing mild trouble. The Nifty Bank had a gap up on last Monday, which is 24th of March. And the gap levels were around 50,680 to about 50,700. I think we are still above that. And just managing to hold. The indicators are still okay. Nifty has, come off slightly. It's filled the gap which was there on Monday. But then there's some mild support around these levels of 23,100 to about 23,050. But the hourly and the 2 hourly charts have started turning weak. So I'm more worried about the Nifty. With that, I think earlier in the day we had initiated some sell calls because we were trading with mostly long bias on the real estate side. I think that's the space which is given some kind of a breakdown, and if that doesn't recover, then you might see the Nifty underperform the Nifty Bank. But for the time being, I think if somebody wants to trade, Nifty Bank would be a slightly better idea. Keep a stop below 50,650 when you try to buy it around 50,800 levels, which is where we are right now. And hoping that this gap would survive, then I think on the upside, 51,250, 51,300 could be the level which the Nifty Bank would do. Though the Nifty could also bounce back because of the Nifty Bank, but it might underperform given the fact that the other components aren't looking very good.
Okay. Mitesh, stock ideas for the last hour?
Yeah. Good afternoon, sir. So I have a buy on Titagal Wagon with a stop at about 780 and look for target around 830 over here. And the sell on Titan, it's just trading below the earlier last closing swing low, which was around 3010. So sell on Titan with a stop at 3030 for targets of around 2910.
Okay. All right. Got it. We'll come back to you after half an hour or so and take stock of the market again. For the time being, let's move on to some of the stocks that have been in news today. And obviously, Vodafone Idea is topping that list. The stock spent the better part of the day on 10% circuit. Then that freeze opened, and now it's up about 19, almost 19%. And this after the government decided to finally convert a large part of the spectrum dues that are still pending to equity. So dues worth almost 37,000 crore rupees have been converted to equity, taking the government's stake in the company to 49%. Rima breaks this down on what really this could potentially mean for Vodafone Idea.
Thank you very much for that. Indeed, the government of India has announced a major financial move, converting 36,950 crore of its spectrum dues into equity. Now, this will raise the government stake in Vodafone Idea from 22.6% to 49%. And even though the government owns 49%, the operational control of the company will continue to remain with the existing promoters. The shares will be issued at 10 rupees per share, which is at a 47% premium to the 6.8 rupees that the share price closed in Friday's trade. Now, this news is a big development for Vodafone Idea because, for starters, it improves the company's ability to raise 25,000 crore in bank debt, which has been long delayed. Secondly, the conversion will also ease Vodafone Idea's cash constraints significantly, at least till the first half of FY28, according to analysts, which will help the company execute its planned capex and also, in a way, perhaps arrest the subscriber losses. Moreover, Vodafone Idea's annual dues to the government will decline over the next 3 years, and these are the numbers which IFL has put out. They're saying in FY26, earlier, the company would have owed 29,000 crore rupees to the government. That number comes to 18,600 crore rupees. FY27, once the moratorium comes to an end, the dues will fall by nearly 20,000 crore rupees, from 43.5 to 23.5, and FY28 onwards, the decline will be close to about 10,000 crore rupees. So fairly sizable, even though the amount that the company still has to pay to the government is going to be pretty substantial. But according to analysts, this development could be a bigger positive for Indus Towers because it shows the government's continued commitment to maintaining a 3+1 market structure and a stronger Vodafone Idea. Now let's get to the brokerage views. IFL says government stake conversion postpones Vodafone Idea's problem. They note that the company's free cash flow remains insufficient for future payouts, and therefore they see the possibility of the government further increasing its stake in Vodafone Idea. That means continued dilution, and that could limit the upside for the existing shareholders. They say that if the government were to hypothetically convert all its dues into equity, its shareholding in Vodafone Idea would stand at 81%. They've got a reduced rating on the stock. Motilal Oswal says another lifeline for Vodafone Idea, but it's pushing the can further down the road. They say the key concerns still remain around subscriber losses. You want to stabilize that, debt raising, AGR dues. They've got a sell rating on the stock, but they've raised the target price to 6.5 rupees from 5 rupees earlier. And this is driven by the government's equity conversion at a premium. Moving on to Ambit, they've titled the report as Government Reaffirms Support to the Industry. They believe Vodafone Idea is best suited only for high-risk investors. They've got a buy rating, target price 15 rupees, because their rationale is the government has only converted its spectrum dues into equity. AGR is untouched, and that gives the government some scope, leeway, to consider further relief measures with respect to AGR dues, while Citi has placed both Vodafone Idea and Indus Towers on a 90-day catalyst watch, citing 5G rollout in Mumbai and progress on debt funding as the key triggers. So for Indus Towers, it's their top pick in the telecom sector. They've got a buy call. And Vodafone Idea, again, it's a high-risk call, buy call, target price 12 rupees per share.
All right, Rima, thanks for that. As you come back here, let's quickly tell you, get you some more views on this subject, right? This is former Airtel CEO Sanjay Kapoor on the entire matter. Listen in.
VIL has taken care of its spectrum dues till FY27, and this will allow them to borrow money from the market and pump it back into capex, which allows them to stay competitive in the market. That's immediate gain that they have. The issue is that the problem doesn't get completely solved here, because in March of 26, they'll be due for their AGR dues, and their current EBITDAs do not allow them to cater to that fully, although there'll be some growth in the ARPU, etc. But for now, the money is available with them on their cash flows are not good enough to take care of their capex requirements in the immediate future. So, so they're not completely out of the woods.
Okay, so they're not out of the woods. They will need to raise a ton of additional money. Perhaps a lot of it would have to be through debt capital. So it's a tough fight for survival out there. That's the view from experts. Well, let's welcome in our fundamental expert on the show this afternoon, Dipan Mehta, who is here with us from Lexer Equities. Dipan, I don't know if you have even any trading interest in either a Vodafone Idea or Indus. I mean, just tell us these developments, how do you view them? And either for a short trade or for an investment, would you keep any telecom stocks on the radar? Bharti, Jio, and of course, Indus and Voda.
Good afternoon, Surbhi, and thank you for having me on your show. I think in Vodafone, a lot of trading activity has taken place at our company and at a lot of brokerages. I think this kind of a move certainly attracts a lot of day traders, but I personally do not trade in Vodafone or invest and wouldn't advise as well, because in my assessment, unless the company increases its revenue by 50%, there's no way it's going to make even cash profits. So, and that looks highly unlikely. So I don't know what the future for Vodafone is. Although we do have investments in Indus Towers, and the prospects over there are definitely improving quarter after quarter, with Vodafone continuing its operation and even wanting to expand its 5G coverage, and that would mean more business for Indus Towers. But the stock has rallied also significantly, and end of the day, I think they're also reaching a stagnancy point because the rollout of Bharti Airtel for 5G is more or less over and done with. So there could be some slowdown in growth for Indus Towers as well. Coming to your question about investment, of course, you should be invested in telecom, but there's only one company to buy, and that's Bharti Airtel. And that's part of our core holdings, as it should be for a lot of investors, considering that the growth is sustaining very well and cash flows also should improve because of lower capex.
Okay, Bharti is your best bet. A lot of foreign investors had increased their stake in Vodafone Idea during the FPO. So in September of 2023 or December of 2023 or even March of 2024, the FI holding in Vodafone Idea was about 2.5%. That jumped up to 12.5% in June of 2024. And since then, they've brought it down marginally, but the FI holding still stands at about 9.9% as of Jan. The DIIs hold about 4.1% in Vodafone Idea. They all bought in at about 11 rupees, and the stock, even after the 20% up move, is at 8 rupees. But let's now turn our attention to the auto sales for the month of March. Sudarshan is here with a quick recap.
So most of the companies reported sales for the month of March have been better than estimates. So we'll start with the two-wheeler companies. First one is Eicher Motors that has reported numbers much better than estimates. Total sales have come in at 1.01 lakh units versus our estimate of around 91,000 units. Even TVS Motor numbers have come in 7% higher than our estimate. But for two-wheeler companies, one thing has to be factored in is OBD norms, that is basically emission standards that has been effective from today. And ahead of that, last week of March, we saw pre-buying. That's the reason numbers are looking elevated, especially for two-wheeler company. And that is one of the reasons that most of the companies have reported numbers better than estimate, especially for two-wheeler segment. Now coming to the tractor segment, both M&M and Scotts Kubota have reported numbers better than estimates. And both the companies are saying because of festival, that is Chath Navratri, last week of March, they saw good growth. And now the important part is both the companies are saying that this momentum is going to continue even in Q1 FY26. And remember, this is the one segment which has been outperforming all the other segments for the last few months. And in all probability, it may continue going forward as well. Now coming to the auto segment, that is the passenger vehicle segment. Here, M&M has done better than estimates, while Maruti's numbers are in line. It's the weakest numbers amongst all the companies that have reported numbers so far. Even in the SUV segment, Maruti has underperformed Mahindra and Mahindra. For Maruti's SUV growth, that is utility vehicle growth, is just 6%, while for M&M SUV growth is 18%. The strongest numbers so far has been reported by Ashok Leyland. For Ashok Leyland, M&M SUV segment, which has been a drag for majority part of FY25. For this month, M&M HCV segment has seen a growth of 15%. Even total sales have increased by 7%, and that you can see it's reflecting even in the stock. Ashok Leyland currently up almost 3%.
Indeed, thank you very much for that. So two-wheelers have reported good numbers aided by pre-buying. Ashok Leyland strong, and M&M outperforms Maruti, particularly the SUV growth rate at 18%. Dipan, your thoughts on the auto sales in the March numbers?
Yeah, first, Nigel, I think, did you see the numbers for Eicher Motors? I think phenomenal numbers for Royal Enfield. And
absolutely.
And what's going to happen is that the realization per vehicle also is higher because more and more riders are going for the 650cc, which is really the most expensive motorcycle in its entire product lineup. So very positive on Eicher, a disclosure we and our clients are invested in. Also, another small company in which we have an investment as a matter of disclosure, Atul Auto came with very good set of numbers, 34% plus kind of growth in volumes. And after a long period of stagnation, we are seeing very good growth numbers over there. And they are trying to scale up their EV three-wheeler portfolio as well. So that stock also has done very well today. But on the whole, I think the auto industry is sustaining its growth. And a lot of it is to do with seasonal and festival factors. I think more importantly, we have to see how April and May play out. But with interest rate cuts down the line and lower fuel costs, I think overall transportation sector should do well. And maybe investors should gradually start getting overweight auto. And by the way, M&M also has excellent set of numbers.
All right. Dipan, quick word on some of these cooling companies. Voltas is sharply lower, down close to around 7%. Any view on that name? In fact, most of these companies, they are lower. The lone one that's up actually is Whirlpool, and that's been the biggest underperformer because the issues you have at the parent level. Your view on this space itself, and given the prospects, would you look to buy Voltas on a dip, or would you find better opportunities?
No, I think Voltas is a solid company, and not only is the room AC business going to do very well this summer, but they are sitting on very good order position for the projects business as well. But look, a lot of it is in the price, considering it trades at very rich valuations. Within this entire, summer investment theme, there are two stocks which come to mind. One is Symphony, which is India's largest air cooler manufacturer, rather air cooler company. It gets manufactured by third party, and I think they should report exceptionally good numbers in the summer months and reasonable valuations. And a very small news item you may have missed is that the promoters of Vadilal Industries have come to an agreement. And Vadilal is India's second largest ice cream manufacturing company. A lot of interesting developments happening over there, whereby some of the uncertainty around the promoter disputes have got resolved. And that stock also is trading at very attractive multiples. About a third of the revenues come from exports as well. So in the summer theme, these are the two stocks that we are advising our clients. Having said that, in both companies, we have an investment, so our views could be biased to that extent.
Badilal and Symphony. Thank you very much for joining in. Dipan, get into a break. As we do that, a quick reminder, discover the power of Young Bharat at the Rising Bharat Summit 2025, where innovation, ambition, vision converge. So this is your exclusive chance to gain insights from global visionaries. Jeffrey D. Sachs, one of the world's most respected economists, and Björn Brende, President and CEO of World Economic Forum, will be sharing their insights on India's role in a changing global order. Right here, Bharat Mandapam, New Delhi, 8th and 9th of April. Book your passes now.
Welcome back. So let's address the elephant in the room, should we say the elephant around there in the world. The number of unknowns which are contributing to the uncertainty around imposition of tariffs. Too much up in the air, and Prashant has moved over to the wall to help us decipher and make sense of it all. Prashant.
Well, it's finally time to focus on those April 2nd tariffs, isn't it? Now, will Trump tariffs be bigger and more disruptive than commonly believed? That's the big question. To be able to answer that question, we need answers to a few questions, answers that we don't have right now with us. Let me try and explain. I mean, all we can do at this point is actually put them up as questions. 4 questions to be precise about the April 2nd tariff announcement, 36 hours away. The first is simple, timing. There is still no clarity on whether Trump will use tariff law requiring a mandatory review period. That is one, or instead use emergency powers that allow tariffs to take effect immediately. Like, for example, the case of auto tariffs, there was no review period. They came into effect immediately. There is also the potential for tariffs to be phased in. So, for example, if he wants to impose 20% in some cases, 10 now, 10 over a period of time. If it is done like that in a phased manner, it should actually take off some of the sting from the initial announcement, so as to speak, from a market standpoint. I mean, it will be seen as negotiating. The second question is size. Not long ago, the consensus worst case scenario was a universal tariff near 10%, with China tariff specifically being higher. These estimates, consensus expectations rather, have risen. I mean, they stand between 15 to 25% for many countries, depending on who you ask. And very few carve-outs are being expected by market participants, at least, when they're announced initially in the first round. Third, there is the question of which countries are impacted. Recently, Treasury Secretary Scott Bessent mentioned a list of the, and I quote, quote-unquote, dirty 15. He didn't name countries, but the EU, Switzerland, Japan, South Korea and India are likely included on the list, along with, of course, Canada and Mexico, where there is already tariffs which have been imposed. The likely 15, this set, would make up some 80% of US imports. Finally is the question of how other countries would respond. Again, I mean, a few months ago, earlier this year, the consensus view was that other countries would use restraint in their response to Trump tariffs. Can we be sure of that now? I mean, unlikely. Many countries are openly saying they plan to retaliate, impose retaliatory tariffs. And of course, as we've seen in the case of Canada, I mean, it's also maybe a vote getter, standing up to Trump and sounding like you're not afraid. Now, these are, I mean, 4 of the big reasons. There are more, but these are the main 4 reasons which basically are causing enormous amount of uncertainty around what is coming next and the shape and size and the way it's going to be conducted and implemented. We'll know, of course, in the next 36 hours, like I said. Now, let's just focus on India and the potential impact. Now, here I'm using calculations from JP Morgan economists. The tariff differential between what India imposes on US goods coming here and US imposes on Indian goods going into the US is 8% on a weighted average tariff basis. So if it is reciprocal, I mean, it should be 8% on a weighted average basis. But JP Morgan points out, and others like Neil Kant and Sunil Kaul of Goldman Sachs have also pointed out, that number rises substantially, that 8% number, if the Trump administration decides to include the VAT figure of 18%. Now, the GDP estimate, according to JP Morgan economists, is 20 basis points if it's simply the weighted average tariff, and that number can rise to 50 basis points if it actually is weighted average tariffs plus VAT. If you can sort of, that's essentially what I'm talking about. Now let's go on to the table, which will tell you sector-wise implications as far as the tariffs are concerned. Very, very simple. Exports to US as a percentage of India GDP, tariffs imposed by US on India, tariffs imposed by India on the US. So it's to make sense of this, I mean, simply put, the way to do this is take the tariff imposed by India minus the tariff imposed by the US. That's a differential on a weighted average basis. And of course, you consider the exports to US as well in terms of how meaningful it is in terms of sizable contribution to Indian GDP. And in that sense, the three sectors which come to mind here are chemicals and pharma. There is textiles and clothing, and agri and meat products. These are the three sectors which kind of satisfy that criterion, which could face a substantial and sizable hit. These numbers are also from a JP Morgan report. Now, of course, the question then, of course, having said all of this, lots of unknowns, some knowns in terms of the data itself, the question for markets near term is this: will US Liberation Day, as Trump has been phrasing the 2nd of April, be another risk shock? Can it cause more downside, or will it be a bit of a clearing event, a hump to be crossed with greener pastures ahead? I mean, it's been exhausting for markets to trade and chase these Trump headlines all along. But finally, and thank God, and I don't know if I should say thank God, but we don't have to wait very long to find out. Back to you.
All right, Prashant, thanks for that. It's really comprehensive and it puts in context what we know right now and, more importantly, all that we don't know and the answers that we are still seeking. So let's see whether we get all those answers on the 2nd of April. I don't know. I wouldn't be holding my breath, at least. Well, let's welcome in our next guest, Atul Mehra, fund manager at Motilal Oswal Asset Management Company. Atul, thanks for joining in. We'll talk about your domestic stance and what you're liking in the market in just a bit. But let's talk about the big global risk at this point in time. At a headline market-wide level, I mean, we nicely started making some sort of a bottom. March was a good month. And now we've started April with a fair amount of volatility. Are you expecting further downsides because of these global issues, or do you believe that the bottom formation process was pretty real and durable, what we saw in March?
Yeah, it should be good afternoon. So the sense is, I think many times, like, you have a lot of these risks that emanate, but it's good to look at things in perspective. So if you look at India specifically, exports to US as a percentage of India's GDP is about 2%. Many of the crucial items like pharmaceuticals are very much needed, and they are the backbone of the US pharma industry. So to that extent, if we look at things in perspective, there will be a lot of noise as we head into the event. We've already seen that. But I would say that if you look at it from the construct of India per se, I don't think it really impacts. Maybe like a month down the line, you wouldn't be as concerned or bothered about this particular event as we see it today. So I think it'll make a lot of noise, but it'll pass by without major issues per se.
So it's like a thunderstorm which will pass by.
Yeah, absolutely. Yes, Prashant. So many times, we've lived through COVID, right? So now just look at this in perspective of that. It's very, very minor. There will be some industries, some companies which will benefit, some will be hurt. But I think 3 months down the line or something of that sort, India as a country, it's primarily domestic driven, and this will be a passing event in that sense. So also in parallel, our government is also negotiating a bilateral trade agreement. So whatever I would say negotiation has to happen, it is also happening parallelly to some extent. So I don't think it is as big an event as it's made out to be, especially for India.
Brave call, Atul. Good to hear that, actually. You don't believe that it's going to be that big a call. Atul, I'm looking at a couple of your funds, that you manage. And if I look at the large cap portfolio, it's pretty much in sync with what the Nifty has. Look at the large private sector banks, Reliance Industries. The top 7 or 8 is actually replicating what you're doing. How are you going to generate that alpha then? Because all those who are investing in your fund will want that additional return, right? So where's that going to come from?
So Nigel, happy to inform that we've completed about close to 14 months of the large cap mutual fund. We did the NFO last year. And so far we have generated about 21% alpha in the large cap fund. So it is, I would say that there are times in the markets where you need to protect capital. There are times in the market where you need to go for alpha creation. And clearly in the last few months, we've become a lot more defensive. We've added a lot of defensive names in the portfolio. And to that extent, you're seeing in terms of some of the common names come by. But the way I see it is, in a full cycle, you'll have time phases where you'll protect capital and time phases where you'll go for alpha. So at this point in time, it's more the former, that you kind of protect capital given how volatile the situation looks like.
Okay, all right. And kudos on that then, Atul, for bringing us that data point that you'll have generated better alpha. You believe maybe at the time being, it's more prudent to preserve capital. Got that. Atul, one of the stocks that you'll have largely overweight in comparison to the index is Trent. That's one of the top gainers today. And there's that debate out there, best behind or best yet to come. What's the view on this one? The store edition is something that the street seems to have liked. The stock, after seeing a big run-up, has cooled off close to 25% from the top. View on it?
So yes, we own it. While I can't talk a lot about the stock, but one thing I can say is, end of the day, you have to look at management teams which have an ability to, in terms of out-execute other peers. And we've seen that either in terms of Trent or either in case of like quick commerce as well, for that extent. Like, end of the day, the space is the same, but there are companies which are absolutely out-executing others. And Trent is clearly, I would say, like one of those companies which has, in the past, executed really well on some of the formats. And in the future as well, they have a number of new formats that are in the making, and which we should likely see the benefit and scale of in the years to come. So yeah, we are holders in Trent in many of our portfolios. We continue to hold it.
Okay, got that point. Overall, on financials, Atul, what are you doing? Because like March brought a lot of hope, and people were saying that maybe they can finally start taking a leadership space. But the problem is that they're so susceptible to FPI selling. Look at what happened. Friday, we had a big negative FPI sell number. Stocks were under pressure. Even today, we'll get to know FPI numbers in the evening. But the way in which large cap financials are falling, who knows? What's your call? What do you like here, and what are you avoiding?
So in terms of the call here is, they are very reasonably priced. Businesses are doing well, and stocks are attractively priced at this point in time. I would say that like today clearly looks like a large FII sell day, but I would say that the FII numbers are also in the construct of what is happening in the rest of the world and so on and so forth. I was talking to somebody the other day, and there was a mention of a lot of global managers kind of looking to diversify at the margin away from US and starting to increase allocation to India. So what we've seen in the last 2 weeks is perhaps some reflection of, in terms of some global managers kind of moving money towards India. So maybe today is a down day, but as a trend, I would say India is to some extent a derivative of the US market is, what something like Taiwan does, what Japan does. So it's a mix of a lot of things. But in like end of the day, like money will chase value, and in terms of many of the private financials are well-managed businesses trading at very reasonable valuations. So I think it'll come back after a point in time.
So Atul, what are your fresh ideas? What are the bets that you've taken in the last 2 months? So give us some color on that. Even if you can't talk individual stocks, tell us the themes and the narrative behind it, which has attracted you to those stocks.
Yeah, yes, Prima. So basically, like I was mentioning, the last few months has been around protecting capital. So we have in our portfolio, in a large cap portfolio that I run, basically added a lot of defensive names across FMCG, across pharma, one oil and gas name as well. So basically, we are trying to make sure that in this volatile time that we've got into, we don't lose capital. And hence, most of the additions in the last few months have been around in terms of protecting capital. So that's been the key theme in the last, I would say, 3 or 4 months.
Okay, all right, Atul. More time at the pitch, so to call it, at the crease. That could be the call of the day for the time being. And once you get into perfect form and weather the storm with regard to Trump's tariffs and the likes, then maybe move into aggressive mode. Thanks a lot for joining in, Atul, and filling us in with your take on how you see the markets pan out and the way you're investing as well at current reckoning. That said, well, it's that time of the day when we move to D-Street chatter. Nimesh joins us to tell us what is he picking up. Nimesh, are we going to be expecting a large sell number from the FIs? Is that the feedback?
Doesn't look like, Nigel. At least that's not the feedback to me. It's been quite mixed, and there is buying as well into select pockets. So, but the nervousness is simply seems to be in the large cap names. The Nifty looks a bit dragged, but if you look at the overall market, the breadth is positive. Mid and small cap is relatively outperforming. We normally don't talk about SME stocks, but a lot of the SME stocks are buzzing in trade. I was just checking out some data. A lot of the SME stocks are up 8-10% in today's market. So on a day when the Nifty is down 300, the Bank Nifty is down 800, to have SME stocks, mid cap stocks buzzing, slightly gives you a different picture, right? So that suggests that there is not big panic, so to speak. I guess it's a bit of positioning just one day before the big Trump event. So that's, and again, only those sectors which might have an impact are in negative territory today. IT is under pressure, pharma is under pressure, and so is some of those chemical stocks and all. So that seems to be the pocket where there's a bit of weakness today. Flows, as I said, it's been quite mixed. There is buying in OMCs and select banks. So the Nifty bank is down 800, 900 points. There is selective buying in the bank names. I guess what's dragging the Nifty bank down is the HDFC Bank stock. We might hear the quarterly update in a day or two, and the street is anticipating some nervousness there. So maybe that's the reason why the Nifty bank is under pressure today. Technically, 23,800, 900 seems to be a resistance on the upside. So that's the level where you will see some bit of supply in days to come. But even within the sectors like pharma and IT, which are under pressure, the sense I'm getting is watch out for pharma names after the announcement. If there is an announcement, it is positive. If there is no announcement, even then it's more positive. So that's the call largely on pharma, not so much on IT. But broadly, I guess there is momentum in the broader market stocks.
Well, that's right, Nimesh. It's that sort of a day when people post-work will be looking at their portfolio and saying we're green for the day, but the headline index was down. Correct. A bit of a rarity, but that's going to be the case for today. Tell us individual stocks. What are you picking up?
So in terms of individual names, the first stock on my list is IndusInd Bank. I've chosen this because there is a bit of buying interest back in this particular stock. The stock is up in trade today, up 4-5%. The volume is on the higher side. And again, I guess the street was a bit short as well in anticipation of that PwC note or the auditor's report. That's not come yet, but I guess that will be a big near-term trigger. But there is buying which has resumed in IndusInd Bank. At least in today's trade, there are buy flows. So that's the first stock. The second stock is BPCL. I spoke about broadly there is buying in OMCs. BPCL stands out among the three OMC names. The highest volume you're going to see in BPCL, and there is aggressive buying from larger FI in BPCL today. So the second stock. Third, couple of metal names which are under pressure, both Tata Steel and Nalco, purely from a flow perspective. In both the names, there is selling pressure today. So expect high delivery volumes on the sell side on both those names.
Okay, thank you very much for that. Now let's get in Mitesh and get in a few... Okay, we'll get to that in just a bit. For now, it's time for a break. We'll come back with more on the markets. Welcome back. Let's get in a few trading ideas as we come to the close of today's trading session. Mitesh is back with us. Mitesh, there is no recovery per se. We're not at the day's low, which is 23,136, but we're pretty close to it with a 350-point cut.
Yeah, that's right. Actually, we did not bounce back from the lower levels. We had one bounce back early in the morning, which immediately got sold in. So not a very positive sign, especially the Nifty, I think, slightly on the buying side for me, because it's trading below key intraday averages. And then the next daily average will come in around 23,100 or 23,050. So which means that we could have another 80-100 points kind of decline, and still there's no sign of a reversal yet. So it's slightly worried, but let's see how it goes. The only hope is that the back Nifty, if it can sustain 5750, 5600, 80 to about 5750 zones, then we might bounce back strongly. But right now I have a BTST on Nykaa with a stop at about 177, and look for a target of around 185. While Oracle Finance is a STBT with a stop at about 76.15, and look for a target of around 75.30.
Okay, all right. Thanks a lot for that, Mitesh. Well, by the way, keep an eye out on a couple of stocks in the broader markets. Coromandel, I think we should pull up the intraday chart out there. The stock was doing a relative outperformance. It was up, I think, 1.5%. But now the stock is up close to 4%. And majority of that move on Coromandel has come in the last few minutes. So that's one of them. The other one is Indian Hotels. That one as well has taken off. Checking in with the bulls, that one is holding strong in an otherwise a little bit of a wobbly market. But the stock that started off well in the green was HAL. This after it signed a 62,000 crore rupee order contract with the Defense Ministry. Upasana joins us to break it down for us. Upasana.
That's correct, Nigel. While Defense Ministry has signed 2 contracts with the company worth 62,700 crore, this is mainly for the supply of 156 light combat helicopters, out of which 90 is for Indian Army and 66 is for Indian Air Force. Now, this is the single biggest procurement by Ministry of Defence from HAL till date, is what the company has indicated. Company has also reported its provisional numbers for FY25, in which revenue stood at 30,400 crore with an uptick of just about 2% on a YoY basis. If we look at the past trends, if we look at the FY24 revenue growth, it stood at double-digit 10% growth on a YoY basis. Now, this year, the growth has come in lower. This is mainly because of the supply chain issues and also delay in the delivery timeline. Now, order book of the company stands strong at 1.84 lakh crores, and company says that it is gearing up for a robust FY26 with supply chain issues stabilizing, enhancement of capacities and also new order wins. Now, on the back of this, UBS has given a buy rating on the stock and that has also raised the target price to 5,440 per share. It says that this award order of 156 light combat helicopters is a positive surprise for the street, and LCA Mk1 Tejas delivery is likely to drive P&L of the company for the next 3 years. Hence, we can clearly see the stock surging in trade today, one of the newsmakers.
All right, thank you very much for that, Upasana. That is HAL, I mean, 0.75% gain, started with about a 5-6% kind of a pop, but basically since then has given up quite a bit of, actually almost all the gains. But the market has also come off quite heavily from that point on. Jay Bala is now with us, Cash the Chaos. Jay, good to have you with us here. Thank you very much. You're expecting one more bounce, one more swing high before... before the downtrend plays out again? I mean, just give us the view near term.
That's right, Prashant. Last week I had pointed this out. The view was same. I expected the Nifty to drop to 23,200, but today the move has been slightly beyond that. This doesn't impact the view too much. Still holding to the view that the market could see one more high above last Tuesday's high of about 23,869. So that was a high last week. So I think there's one more high view for the counter trend bounce. The market has been quite obliging, and it's been. I said on 4th of March to Nigel that market is due for a 1,000-point bounce, and it gave a 1,000-point bounce. And on the next week to Mangalam, I said even if the market were to come to 23,800, this would be within the parameters of a counter trend bounce. But the market should periodically misbehave than my expectations. That's how the markets work. So right now I'm still anticipating one more highs to come through. But if the markets were to get rejected under 23,412 and also print 22,676, then that would mean that last Tuesday's high is the end of the counter trend bounce. So so let's see what the markets are doing. But the message from Reliance is that so far the bounce is a corrective rise. The message from the auto index is that at least for the auto index, if not for the whole overall market, the rise is a corrective rise. And if Nifty IT index were to break below the March low even by 1 point, then it would mean that this has got further a lot of downsides to work with in the medium term. That could be a bounce in the short term.
What's the March low on Nifty IT that you're watching closely? And the call on Nifty IT is that it heads down to 26,000. Is that correct? Because the current market price is 36,000 on Nifty IT.
That's right, Rima. But it's a medium-term call. Probably that will work out in say something like several months time frame. The low of March is 35,674, and if that were to get exceeded, the markets are likely to complete a short-term price structure. And then that will result in a short-term bounce somewhere close to 39,000 to 40,000, maybe even slightly higher, but I'm expecting 39,000 to 40,000, 39,900 to 40,000. So if markets were to exceed that, it will still be okay, but it will give a better opportunity for exit in the IT names. It's mostly the frontline IT names which are quite weak.
Okay, all right, Jay, stay on. We'll have more questions for you in just a bit. But we do have to take a quick break on that note. As we take the break, let's tell viewers about some good news. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. You can get instant access to breaking news, in-depth articles, analysis, and financial world updates at your fingertips. You can download the app from either the Apple Store or Google Play, or, of course, you can also scan the QR code that's coming up on your screens.
Welcome back. Keep an eye on a couple of stocks. APL Apollo came out with a fairly good set of operational update. JTL's operational update was pretty much okay. But as we speak, it appears and the street is buying into that dip that we saw earlier today. JTL has moved to the high point of the day. To pick out another one, JG Chemicals, that's another stock that's up close to around 7%. Just highlighting these because these stocks are moving higher on rather large volumes. So a couple of them from the broader markets looking good. Jay Bala is still with us. Jay, I believe you have two bearish calls, shorting calls. One is Siemens and one is HPCL. Tell us the levels you're tracking there.
That's right, Nigel. Siemens, we had discussed in late December, early January. I had pointed to a triple top for the stock, and the stock from 6,500 then on has dropped to about 4,500. The rise from 4,500 to where it is today, the price action is looking like a corrective bounce, and it might be the end of this corrective bounce. As long as the stock remains below 55.25, it has potential to go back to its fresh 52-week lows. So, it's a difficult market. Stay light here. Try to do synthetic shorts or something like that so that you can keep your hedges and risks quite low. And the second is the short call on HPCL. HPCL has got probably one more higher highs to come through. As the recent high was about 372, possibly one more high close to 375, maybe slightly exceeding that to 380, and then I'm anticipating that to get repel lower. We also, I've been of the view that crude is likely to run higher to somewhere close to $99 to $100, and the recent price action is confirming that. Crude is probably already bottomed, and it's likely to rally to somewhere close to 90 plus to somewhere close to $100. So probably that will weigh in on HPCL. Bearish on HPCL with a stop loss of about 375.
Okay, all right. You're talking about Brent going to $90 to $100. Did I get that correct?
That's right. That was the view last week, a couple of weeks ago also, Nigel. And I said that several months ago that crude needs to drop below the September low. It did that. And I anticipated one more lower low, but it didn't come through. But it's taken out important resistance at 72 unchanged for Brent and 70.66, I think, if my recollection is correct, for the NYMEX variety. So both varieties are pointing to much higher levels. Brent price objective is $99 to $100.
Bapre, 99 to 100. Jay, I don't see gold here. In terms of the view. 3,100 plus. What's the view?
See, gold has coming to a very important resistance, and I'm waiting for a reversal signature to come through. It's still bullish, but and I'm anticipating some kind of surprise drop that surprises a lot of people. If gold were to, as things stand today, if gold were to drop to about 30.77, I would analyze the intraday price movement and come to the conclusion if it's topped out or not. But it's very close to an important high. Either it is a medium-term high that brings the yellow metal to somewhere close to 2,500, or it's a long-term top that brings the bullion to somewhere close to 2018 levels, 2016 levels, somewhere about $1,300. So it's still an evolving situation. We don't have a confirmation yet, but it's a big potential, and that also has an implication on the dollar index. Without the dollar index getting stronger, this is unlikely to happen. If the dollar index were to print 106.13, that will also convince me that a long-term top is due for gold.
So very quickly, we're running into market close, Jay. Now to wrap it up, what is the best trade right now, near-term trade on either the Nifty or the Bank Nifty?
Yeah, Bank Nifty, you could look at something like ICICI as a separate candidate, and we might have higher highs to come through for ICICI as long as it holds above the recent low of about 1280. I don't expect it to print 1280, so that could be used as a stop. fresh 52-week highs possible, but the banking index may not take the result in 52-week highs. But the main stock is probably HDFC Bank. If we see a print of 1743 on HDFC, we can very broadly conclude that the correction is completely over. We don't have to wait for Nifty to print 22,676.
Okay. All right, Jay, just hold that thought. We'll quickly recap the day's close and then we'll come back to you for some more inputs. And it's a week close, 340 to 350 points lower. That's where the Nifty will finally end after the adjustment of the close. And if we talk about the weakness, well, a lot of large caps. It's very heavy-duty large cap selling that we've seen. So HCL Tech, HDFC Bank, Infosys, ICICI Bank, Reliance, TCS, L&T, Axis Bank, you get the drift. The big boys have been absolutely slammed hard. And even some of the PSUs have not been spared today. I mean, for instance, BEL is down about 3.5%. Asian Paints, I could go on and on. Lever as well. Most of these stocks weaker. M&M down about 1%. ITC down about 0.7% as well. The only stocks that have actually held out on the Nifty, Trent, because of that store update, which investors like, 4.5% higher. IndusInd Bank, not sure if there's something brewing there with respect to more fund infusion from promoters, but 5% up. The market was excited around this one. Bajaj Auto did well today. There was some buying on Zomato, but that was it. Bajaj Auto and actually Hero Moto as well. So those two stocks did well, but otherwise heavy-duty large cap selling today.
Absolutely, and you know the broader market though did a lot better. The mid and small cap indices down, but down 0.7, 0.8%. They're up on your screen, and the Nifty micro cap index was actually up on the day, about 0.65%. Although I have to say, I was just sort of, sorting the broader market gainers and losers by volume. Volume is on the downside. I mean, there is no doubt about it. 2:1 is the advance decline. I mean, advance is outnumbering declines. But unlike what I've been saying for the last many days, today it's actually quite the opposite. Volumes, number of advances, greater than it declines, but volume is on the downside. Quite clearly. So that's something to kind of keep an eye out on. That FII number is also going to be in focus. Remember, FIIs were sellers on Friday after buying for a while. So I think today's figure should also be in focus. I mean, are they at the margins getting a little... I mean, they've only been buying for a few days. So I think in that context, it'll be interesting to see what they've done today. 340 points lower on the Nifty, 23,180 is where we leave off at. It's a wrap of this edition, a closing bell from all of us. Thank you for staying with us, but we're not going anywhere. Rima and I'll take you through markets forward coming up after a quick break.